War in the Middle East is escalating. Oil prices are rising. Markets are getting nervous. But something strange is happening. Gold, the asset investors usually run to during a crisis, is actually falling. Now, that doesn't make sense. During wars, gold is supposed to go up. So why is it going down? And more importantly, could this change very soon? Let's break it down.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
So historically, when geopolitical tensions rise, investors tend to look for safer assets.
Huh? What?
And gold has been one of those safe havens for thousands of years. It isn't tied to any one country, it can't be printed by central banks, and during the periods of uncertainty, investors often turn to it to preserve wealth. So when war headlines appear, many people expect gold to surge. But markets don't always behave the way people expect, because during global shocks, there is another asset that often attracts capital first. During periods of global stress, large institutions usually prioritize liquidity. And the most liquid financial system in the world is the United States. The US dollar sits at the center of global trade. All transactions are priced in dollars. Financial markets settle in dollars. So when uncertainty rises, capital will often flow into dollars first. And when the dollar strengthens, gold often struggles in the short term. That is exactly what we have been seeing recently. And as geopolitical tensions increase, the dollar has been attracting safe haven demand, and that puts pressure on gold. But the real economic risk in this conflict isn't just the war itself, it's energy, especially oil. And the most important location in this story is the Strait of Hormuz. Roughly 20% of the world's oil supply moves through this narrow corridor. A large portion of the oil goes to Asia, countries like China, Japan, South Korea, and India. So when tensions rise in this region and with the strait closed, oil markets react very quickly, and we are already seeing that reaction. Oil prices have surged to around $91 per barrel, rising roughly 24% in just 1 week. That is a massive move for the global energy market. A 24% move in oil in 1 week is not normal. That's the market pricing in geopolitical risk. Because when oil moves fast, it doesn't just affect energy companies, it affects inflation. Transportation costs rise, manufacturing costs rise, and all those higher costs eventually spread throughout the entire economy. And once inflation risk comes back into the conversation, central banks face a difficult decision. Because if oil keeps rising, inflation could remain stubbornly high, which means interest rates may need to stay elevated. And that brings us back to gold. Gold doesn't generate income, it doesn't pay dividends, it doesn't produce yield. So when the interest rates are high, investors suddenly have alternatives. Government bonds begin offering attractive returns. And when investors can earn incomes from bond, gold becomes less attractive by comparison. That is why rising real yields often put pressure on gold prices. So you end up with this unusual situation. War increases uncertainty, but uncertainty strengthens the dollar and supports higher yield. And both of these forces can push gold lower in the short term. But just as markets were reacting to the geopolitical situation, new economic data came out in the United States. The latest job reports showed something unexpected. US payroll fell by 92,000 in February, and unemployment rate rose by 4.4%. That suggests the labor market may be cooling, and that also could change the entire macro picture, because if the economy begins slowing, the Federal Reserve may eventually have to consider lowering down interest rates. Remember what we discussed earlier. Gold struggles when the dollar is strong and the interest rates are high. But if the economy weakens and markets begin expecting rate cuts, those forces reverse. The dollar can weaken, real yields can fall, and historically, that environment often has been supportive for gold. So that's the macro picture. But macro tells us the story. Price tells us the truth. So the real question is, how are markets actually reacting right now? By the way, if you want to follow my journey to 10K project and see the trade recap updates that I've been posting, I've been documenting everything in my Telegram channel called Julian Yong FX. The link is in the description if you want to follow along. Before we jump into the charts, a quick reminder for those of you trading the US markets. Daylight saving time ends this Sunday, which means the market schedule shifts forward by 1 hour for us. The US stock market will now open at 9:30 p.m. instead of 10:30 p.m. And for most high impact economic data releases, it will now come at 8:30 p.m. instead of 9:30 p.m. So just keep that in mind so that you don't get caught off guard in the coming week. All right, right now let's see what the charts are telling us. Let's start out with the US dollar index first because this is the hidden force that we discussed earlier. As you can see, since February 28th, DXY or the US dollar index has been rising tremendously and right now is at this resistance. For this past few days, he has been also playing around this resistance, but he has yet to break it. If you look at it from the weekly perspective, you can see that the week ended with a large wick, as you can see right here. So this tells me that it did not manage to break and continue above. Now this is a good sign because when the US dollar stays this way, it means that the resistance is quite strong and it has a potential for the US dollar to come back down. Now if it goes back down, where does it go to? Very likely it will go down to this support right here. So when US dollar starts to transition downwards, then gold, which is inverse correlation to DXY, will tend to move upwards. So when XAU is up, you can see that DXY, right, which is the US dollar index, DXY goes downwards. Now, if the DXY manages to, for whatever reason, break above this resistance and continue going upwards, then you will see that gold will then start to move downwards. Again, the inverse correlation, if DXY is going up, XEU, you will actually go down. Next, let's look at oil because energy is the real transmission mechanism in this conflict. And as you can see, just because of what happened to the Strait of Hormuz, oil prices actually started rising rapidly since 28th of March. As you can see right here, this spike even broke above various resistance. So right here, these are a few resistance that are mainly supporting the chart, but because of what's happening right now, all these areas have been broken. Right now, WTI or oil is at this next resistance. If the situation persists, we can actually see that oil prices will continue rising even more and breaking through all these resistance. However, if things change for the better, then we can start to see oil start consolidating and possibly coming back down. Now we've seen DXY, we have seen oil. Now let's look at gold. So gold right here, as you can see, this is the daily chart. Gold has actually still respected this daily resistance right here. Gold has broken above, right now playing between this level. And yesterday or Friday, I would say it actually closed in a very bullish situation. Right now, it is still sideways because one of the main areas, if you have a look on H4, you can see that this area here has yet to break. This area here, if you remember how I teach SRR, you can see that this is a S, break R, break R, break R, new R. Price broke through this area right here. So this area now becomes a swap zone. When this area becomes a swap zone, this is the area that price would reject from. As you can see, this was what exactly happened over the past few days. Right now, gold is back at this resistance level again. So in order for gold to continue higher, the first area that it has to break would be this resistance right here. Because if it does, it will continue going up. But if it doesn't, it will slowly start going back down to the support. So this is what we see for gold from the technical perspective. Next, let's look at how the broader market is reacting. And for that, we're going to look at the S&P 500. Now, if you have a look at what's happening right now, the S&P 500 ended up pretty bearish over the last few days, it has actually come down all the way until this level of support right here. So what do we expect? This level here is quite strong. So we want to see whether this level here is respected or not. If it does get respected, SPY will continue its way up. But if it doesn't, and if it breaks this level, especially if a candle closes below this level, let's say we were to draw a candle like this actually will show a sign that SPY would likely want to go back down, right? So if it goes down, where will it go to? It will head down towards this level of support right here. But if it doesn't, and this level is being respected, then like I said, it will tend to go back upwards. Now, if sentiment really shifts, the first place that we will usually see would be from the market leaders. So I'm going to start off with looking at Apple right now. As you can see, this is Apple, and Apple is right now at this level of support. Price actually broke through from this resistance right here, broke through this support. Now it's at this level of support. So this is a strong support. So I want to see whether Apple is able to maintain and hold this support. If it does, there's a chance of it going up. But if it breaks through, likelihood it will come down to the next support, which is right here. So let's see what happens to Apple. Next, let's look at Google. As you can see, Google is right now at the support, and Google seems to be playing sideways for now. I want to see Google push up into this level of resistance right here. And if it does do that, and if it's able to break this level of resistance, it will head back up to this level right here. But if it doesn't, it's likely going to come back down to this level of support right here. Let's look at Microsoft next. Microsoft doesn't seem to be doing too well. It has been playing sideways for a very, very long time right here. Right now, it's back at this resistance. So we want to see that Microsoft is able to break past this resistance to be able to continue its way up higher. But if it doesn't, if it respects it, it's slightly heading down to the support. Right. Next, we have Tesla. Tesla has also been sideways for a very, very long time. You can see right here, up and down, up and down. And it seems to be creating lower lows and lower highs. However, this support here is still being respected right now because this area is quite big. So I want to see that Tesla is able to have a push back up into this resistance. But if it doesn't, and if it breaks below this resistance, it's going to head down to this level of support right here. Next, let's look at Nvidia. And as you can see on Nvidia, prices are still playing sideways for the most time. You can see right here going up, but then heading down. So where do I expect Nvidia to head towards? This would be the next area of support that price is heading to. And we want to see whether Nvidia is able to hold this level of support, because if it does, then you can see price bounce back upwards. But if it doesn't, and if it breaks, you can see that Nvidia will start to head lower into the next support. Next, let's look at Meta. As you can see, Meta has also been playing sideways for a very, very long time. It's been there for a few weeks right now. It is still playing sideways. And as long as this support does not break, it will bounce back up. As long as this resistance doesn't break, it's still going to come back down playing sideways until this level breaks or this level breaks right here. So let's see what happens to Meta. Last but not least, let's look at Amazon. So Amazon managed to push up to this level of resistance. However, it was rejected again and price started moving down. So I expect it to come down back to this level of support right here and it to play sideways until this area here gets broken. This is a very, very strong area because as you can see right here, this is a support. What happened to this support? It got broken through after earnings. And when this area gets broken through, this area now becomes a resistance. Hence why you can see that price actually rejected and went back down. So this area here is an area that needs to be broken for Amazon to continue higher. Markets just don't react to headlines. They react to liquidity, interest rates, and positioning. And right now, those forces are all colliding. So the charts over the next few days could tell us whether this geopolitical tension becomes a real market risk or just another temporary shock. Because right now, the market is balancing between two competing forces. On one side, geopolitical risk pushing money into the dollar, and on the other side, a weakening labor market that could eventually push interest rates lower. Whichever force wins will will likely determine the next major move for gold. And this is something that every trader should be watching very closely. Now, if this video was helpful, help me out by clicking the like and subscribe button. And if you have just started trading or thinking about getting into trading, then you will definitely want to watch this video right here. And I look forward to seeing you in the next video. Bye bye.